What's your own understanding of the slowdown that we're seeing in China? Do you think it's structural or cyclical?
So right now, I think, Tanvir, whatever data we are seeing in terms of growth slowdown, it seems to be more related to the policy actions that the government had taken before for managing the cycle. So because exports are doing well, the government typically takes up counter-cyclical tightening, and that's what they had been implementing. Having said that, they did face this challenge of COVID, and consumption has been held back. And that's what has made them dial down on that tightening. And so we are seeing the RRR cuts. Monetary policy easing is already happening. Our view is that incrementally they will now focus on fiscal easing, which will help stabilize growth. But that will really more happen from first quarter of next year. The fourth quarter will still be weak. And then from first quarter onwards, we should see improvement in China's growth cycle.
And what sort of policy response can we expect from the regulators in response to what's happening on the external side, on the domestic side as well? Do you think a triple R cut will be enough, or would they have to move lower on rates?
So triple R cut will be taken up for sure, but we do think that now they do need fiscal easing to come through as well. You do need that infrastructure spending to be as per the plan that the government had. As you know, that so far, local government bond issuance has been much lower, tracking lower than the full year target that they had or quota that they had. And that needs to pick up. And we do expect that to happen in the coming months. And, you know, the spending will really be reflected more towards the year and early next year. So that's the part which needs to join in along with monetary easing. The fiscal easing should come through to ensure that you have some stabilization in growth. So effectively, it will be reversal of that tightening that the government had taken in the last few months, both on fiscal and monetary front. They have to reverse that and then support the overall domestic demand, while external demand and capex continues to do well.
Right, but how much more spending would we be looking at in terms of those infrastructure bond issuances at the state level?
So we should see, so far they have been, the full year quota has been only utilized to the extent of about 50%. So 50% of the full year quota is still left, and we think that's what will get accelerated in the fourth quarter. And the spending will begin to show up from December, January next year. Also, we suspect that the other aspect that is being kept in mind is that the next year is the year of transition at the political level. And so the government would want next year's outlook and the numbers to be good. And so that is why we think that they're probably delaying the issuance of bonds to ensure that next year is good and not to use up a lot of the bullets in this year itself. And so, okay. Yeah, I think both that aspect of, the growth is weak, but at the same time, next year there is political transition. You should see that fiscal easing picking up from the fourth quarter.